All right, everyone. Good morning and happy Wednesday, April 2nd. Happy April. And yeah, the next 24 to 72 hours here on Wall Street shall not be dull. We got Trump talking tariffs after the close. So I'm thinking anything kind of goes here as far as today. And then who knows, guys? Maybe we get through today, get through tomorrow, and it's a sell the rumor, buy the news kind of event. Into all of that, not a great looking market here. If we look at the rankings on the big three sheet, not all that good. QQQ a negative 54, IWM a negative 86, S&P's a negative 48. So every index gets a negative score. And then Big 10, you have Google negative 62, Nvidia negative 56. So could it all change tomorrow? Yeah, anything could happen into all the happenings here. Not a great looking market. So I'm thinking day trading. I'm thinking a short-term focus. Still makes a lot of sense here. But in terms of, all right, where's a few spots of relative strength? In terms of Big 10, it'd be Tesla and Apple. Now, the issue for a Tesla and Apple and Netflix and Meta, etc., if the QQQ keeps rolling over, they're going to go with it. So I think it's tough to want to take a Tesla, take an Apple, although they might be a spot of relative strength. Now, we're using the term relative strength a little bit loosely. Tesla only has 10 points out of 120. Not amazing. Apple only has 9 points out of 120. Compared to a Google, Amazon, Microsoft, Nvidia, yeah, they're a lot better. So looking at a Tesla, it's having a little trouble here, that hourly 200 SMA. Not the craziest spot to have some trouble at. You get the big flush, you get your rally off the bottom, and then a good, call it 1, 2, 3 times in a row here. They really can't get it and keep it above that hourly 200. In the pre-market, looking like a gap down to about 262 to 263. Yeah, so I think in the short term, if they could get it and keep it above that 270, 275, and then to catch it on a 5-minute buy signal, 15-minute, 30-minute, that could clear the way for a bit more upside. With a crappier market behind it and trouble getting back above that 200 SMA, could be a tougher name to call for further upside here in the short term. So patience on the Tesla under, let's call it 275, 280. And then Apple here. I actually like Apple. The only thing for Apple is I like it a little bit more. If they could get 1 or 2 good closes back above the daily 21. All right, 1 rejection, 2 rejection, 3, 4, 5, call it 6 rejections. Again, not a great market behind it, and just a little tough to buy you under that falling 21. What I would like to do here, above that daily 21 EMA, could we find something like this 30-minute squeeze? Really clean 30-minute squeeze. You got the white arrow, you've got the structure, trend, momentum. If they can get it and keep it above the daily 21, then I think you're taking something like that on a 5-minute, 15-minute, 30. And you don't call for a huge push, but a move back into even 228 to 229. If you can catch that on a weekly expiration option, it's a nice bang for your buck. In terms of, are we asking too much from Apple? 224 into about 229. It's an average true range move. So we're not really asking for too much there. Get back above the buy zone. Give us a good-looking 15-minute, 30-minute squeeze. Put your big boy pants on, and then an average true range move higher. Below that 21 EMA with a sketchier QQQ behind it. Got to put that idea to the side for now. So patience with Tesla, patience with Apple, and then in terms of true relative strength, we could look at gold, energy, XLP, utilities, and silver. They're actually spots of relative strength with good scores. Gold has a 114, energy a 110. So for gold here, gold's been pretty good to us. The only thing I would keep in mind about gold Granted, gold's a beast right now, so I wouldn't go shorting gold. But in terms of how do you jump in there and play it long, when you look at the daily time frame and the weekly time frame, from a swing trade perspective, probabilities wise, it's already made the easy part of that move. You had a nice weekly squeeze back here, fires long, big push off the 21 EMA. That green line measures 3 average true range moves above our 21 EMA. A good squeeze usually takes you towards that green line, and that'll usually be the easier part of that move. Now gold can get a little bit tuckered out up here. At some point, might pull back to the buy zone. Now I'm not going to short it just because we're technically overbought here. But in terms of all right, how do I get long gold from here? Knowing okay, any given day now, any given week now, we could get a bigger buyable pullback. I think you just day trade it. If they want to take it from 287 all the way into $300 from here, catch it on your 15-minute, 30-minute, hourly time frames. They're not all going to fire long, but if they're going to take it another $5-10 higher from here, a good chunk of those lower time frame squeezes should fire long. Wait for your spot, take your entry, catch that intraday move. Then you go to bed in cash. You don't care if tomorrow morning gold is back into 280. So I would take a day trade approach for gold. And then as far as silver goes, I'll show you on the silver futures. I think they're a little cleaner. And if I were to trade silver, it'd probably be through the futures. If this was a chart of Google, Amazon, Apple, Nvidia, I'd almost want to put my entire account in it. That's how good I think it looks. But it ain't Nvidia, Google, Microsoft. It is silver. But check it out here. Weekly's white arrow, right? So perfect score of 15. 3-day squeeze, white arrow. Actually just fired long. The 2-day squeeze has a perfect score of 15. You've got a daily squeeze and another perfect score of 15 with a 4-hour and a 2-hour squeeze underneath it. Again, if that was one of my favorite names, an S&P, a QQQ, any of the Big Ten names, I'd want to be all over that with big size. Relative strength and a big multi-squeeze setup. Two different things I think you could do with that. Being that you have that bigger multi-time frame squeeze, you could just look at it and take a swing trade approach. All right, I'm going to anchor to the weekly chart, for example. And I'm going to try to take that weekly squeeze, and I'm looking for a move into about $38 and change. You're doing that, I think you're going, 45, 50 plus days till expiration. And I think you got to give that weekly squeeze breathing room down towards, 32 and change. They pull it back from here to the 21 EMA. It's still going to be a really good looking squeeze. So option A is I'm going to take a swing trade approach here. I'm going to buy some in the money or out the money calls. I'm going to give that plenty of time till expiration, and then pretty much just sit back and let that squeeze work. In terms of where do I like to do that, this is a really, really good example. Clean weekly squeeze, clean 2-day squeeze, all the above. The other option is, all right, they might go and take that weekly squeeze. They might kick off a move from 34 and change into 38. And if they do that, I can try to day trade the entire move. They've got another $3-4 of upside in the tank from here. Not every 5-minute, 30-minute hourly squeeze will fire long. But if you're firing bigger time frames, they should fire in that direction. Trigger the weekly squeeze, break it long, then look for a 15-minute, 30-minute entry. If they keep the move going towards that target from the weekly squeeze, you should catch some pretty good action on a 15-minute or a 30-minute. Wake up in cash, day trade it, find your spots. Then you don't care the following morning if silver totally falls apart. And again, in terms of, hey, what does a good swing trading setup look like? I think silver is a perfect example. In terms of, more importantly, what's a great swing trading market look like? To me, this is pretty far from that. Index negative 45% of max strength, Big Ten at negative 31% of max strength. Think I want to keep on day trading that market. But all right, guys, a couple things off the board for you, and then I'll show you two brand new squeezes. I don't think you do anything with them for quite a while. We found them early. We can keep on talking about them. Watch them develop. I think for Netflix, it could be a situation where uh, that might be trying to set up for a move sometime in Q2. And then the other idea I'll show you in Microsoft, that could be more of a 2025 thing. Right? Could make for a big move sometime this year. But short term, I don't think you do too much with them. Number one here would be Netflix. A few of you might have heard of this one. All right, so for the Netflix and the chill, brand new weekly squeeze setting up. Now you do have earnings coming up on the. Oh yeah, kind of forgot about earnings. We got the tariffs, we got the Fed, we got earnings. Whole smorgasbord. But all right, for let me grab my. Give me 1 second here, guys. Got to grab my drawing tool. Make things presentable for you. All right, so brand new weekly squeeze here for Netflix, and last time we had one. And again, in terms of what's a good swing trading setup, there's a perfect example. Bigger time frame in a squeeze. White arrow means you had perfect trend, you had perfect structure, you had momentum, perfect score of 15. It's the marriage of compression. Right? We're building up energy, gearing up for a big directional move. And then your trend checklist, your structure checklist, all of your checklists point towards that should be a move higher. They do that on a 5-minute or a 15-minute, it can make for a great day trade. They might push that stock higher for 15, 30, 60 minutes. They do it on a weekly, that can make for a much bigger move. Again, I don't think you touch it today, but looking at it for now, we have 10 points out of 15. Meaning put a gun to my head today, I'd have to buy it. Bull trend, bull structure. The only problem for now, you're getting that MACD line down there crossing back below zero. So at no point, this month, next month, any point down the road, at no point will that weekly squeeze fire and take out the high if they can't get momentum back above zero. So it could be a situation like back here. All right, little pullback, little chop, a brand new weekly squeeze. Momentum finally crosses back above zero. That kicks off the push, and off goes Netflix. The opposite can happen. Think the SMH, guys. All right, the SMH pulls back into a giant weekly squeeze. You had really good trend. You had really good chart structure. You never got bull momentum. And they pop it once, they pop it twice, pop it 3, 4 times, trying to get something going. Can't get that wind at their back. And then eventually you lose your structure, you break your trend, and the squeeze just goes and fires short. So in terms of, all right, at any point down the road, what do we got to get here for Netflix in terms of a buy signal? They've got the trend, they've got the structure, they have the squeeze. If they can get the momentum, that could make for another round like that. In terms of targets, as of right now, if they were to fire it long, you would look for a new all-time high around 1100. If they were to break it short, you're looking for a move down to 770, 750. Now, for conversation's sake, just say we were in a really, really good swing trading market. S&Ps look perfect, QQQ look perfect. You don't have alignment in Netflix. Even if Netflix had a perfect weekly squeeze, you wouldn't want to jump in and buy it yet. Take that weekly squeeze, pop open the hood. You don't have a daily buy signal. You don't have a 4-hour buy signal. You don't have an hourly, a 30-minute. We want the weekly squeeze to be perfect, right? Checking off every box. And then underneath it, really good alignment. 1 hour time frame bullish, locked and loaded. Daily chart bullish, locked and loaded. If you go back and study the action from that weekly squeeze, everything underneath the surface, really, really bullish. Basically screaming up towards that weekly chart. All right, let's go for it. We don't have the same weekly squeeze right now, nor do we have the same alignment. But to our benefit, like I mentioned, we found it nice and early. So we'll keep on coming back to it, watch it develop. And yeah, I think maybe at some point in Q2 could be a swing tradable move off of Netflix. All right, and now the next one, which is much bigger picture. Again, a conversation for the entire year, I think. The brand new monthly squeeze here from Microsoft. And I believe you've only had since 2015, we've had 1, 2, and now our third monthly squeeze. Back here in 2015, that kicked off a casual, very casual $33 to $300 move. And then you had a modest pullback, little back and forth, little chop, brand new monthly squeeze. That fired long. That kicks off a 250 into 450 push. And now you're pulling back a bit and a brand new monthly squeeze. The great thing about a monthly squeeze, like through my lens, which is very much a squeeze first lens, I think the entire rally last year came as a result of the monthly S&P squeeze. And we can point towards other things, of course, but from a language I think we all speak, yeah, no wonder the market was really, really strong last year. Had a giant monthly squeeze on the S&Ps, finally fired long. It did what they should do. Build up all the energy, release the energy. You're getting a good 8, 9, 10, 12 months of wind at your back. We all love that part of the equation. What we don't love is the building up of that energy. The S&Ps were in that monthly squeeze from September of 2022 up until December of 2023. A little more than a year and change. Worth it, of course, right? Made for a really, really good 2024. But point being, when they fire, they can make for some of the best moves you'll get. Until they fire, they can make for some of the longest chop fests you'll also get. So again, I don't think you do anything at all with a Microsoft monthly squeeze right now. But maybe later in July, maybe in the fall, maybe by winter, they turn this into an actionable idea. Better trend, structure, momentum, perfect score, a bunch of buy signals. We get to that point. I think you jump in, you buy calls that expire like 150, 200 days down the road and just sit on them. So 2 bigger picture ideas for you. Brand new squeezes, nice and early. We'll keep them on the board, watch them develop, and then at some point this year, try catching some action there. For the short-term market we got in front of us, got to get through today, got to get through the tariff talks tonight, and then see if anything changes. If nothing changes, we're in a market that I think is short-term does want to continue to go lower. The scores and the signals would suggest such. But all right, y'all, any questions for me, drop them in the chat. Any chart requests, I got you covered. And then folks in my room, we'll kick off the open in about 15, 20 minutes or so. Shall not be a dull one. Or it could be. a little flush into the open and then big nothing burger all day long. One more thing I do want to point out, though. Could matter, could not matter. Keep an eye on $P call today. Watch the put call ratio. Back on that Monday candle where the S&Ps failed to break back below that recent low, you had a really big pop here in the put call, all the way up into 1.13. That's pretty much just evidence that back on Monday morning, a lot of folks are jumping in and getting short. And I got to think they maybe feel a little bit trapped. Granted, things are pulling back here this morning, but Monday morning, market gaps down. You got the flush. You got the undercut of the recent low. Big pop on the put call. Everybody buying puts, and then a pretty quick move back above that level. So just one thing to keep an eye on. On the gap down here this morning, in the event you do get another big pop above that one level here on the put call ratio, again, we could gap down 5, 10, 15% tomorrow, but good to know that a lot of retail is leaning heavily short. And the market can really feed off of getting folks trapped, a little bit off sides. All right, come on in, y'all. Water's warm. The S&Ps are going to zero. Come on in and get those puts. Those moments in time, it's usually harder for the market to fall apart. So food for thought there, but let me get caught up in the chat, see what you folks have got. Hey, good morning, Alan. Good morning, Kurt. Good morning, Miss Debbie. Kurt, WM for a long. Yeah, really, really clean daily squeeze. What I like about it is you're catching the signal on a fresh momentum turn. Two different moments in time. You had the white arrow back here, but notice how momentum had already been in a bull cycle. All right, cross is positive back here. Pushing. By the time you pull back the buy zone, momentum's maybe a little tuckered out. You go through a bear cycle, they hold support, they hold structure. Now you're catching a brand new white arrow on a fresh momentum cross. In the back here, we got gas in the tank, but it's getting low. We got to find a gas station at some point. And now at this point in time, you got a full tank of gas. So yeah, I like that daily squeeze. I like all the buy signals here. We don't have any of those in the S&Ps, QQQ, all the above. And then let's check the 2-day squeeze. Yeah, really good looking 2-day squeeze. I like it. The only question is what's going to happen here today, tomorrow with the market. And one thing that a weak market can do is ruin the fun for good looking setups. WM definitely being one of them. But we saw that with McDonald's. Now, did it totally fall apart? No. But did it go on and take that daily squeeze and kick off the trend like move it should? No, it didn't do that either. Push and then right back in. We saw that with Alibaba. All right, big push, nice daily squeeze, looking for a breakout, and then right back in. To me, the bigger question is not, is WM a clean setup? It's more, can the indexes support some swing trading? Get through tonight, get through all the tariff talks, and then tomorrow morning the market goes limit down. I think tough for anything to go higher. So my preference in that kind of situation, when I've got a good looking setup, but I don't really trust the market behind it, I want to try to day trade it. In a good market, I'm going to take that daily squeeze, I'm going to swing trade it, and I'm going to play for a move into, call it 240. In an iffier market, I'm going to take that daily squeeze as wind at my back, and I'm going to day trade it. 5-minute squeezes, 15-minute, 30-minute squeezes. Day trade it from current prices towards that 240 target. And I think a good candidate to do that on. I like it. Yeah, so Inca Warrior, good question. Back to the put call. And not something I'll claim to watch every day, but where I do like to pay attention is near these extremes. Put call down around, call it 0.4, 0.3. There's a lot of call buying taking place, which by itself means nothing. Right? There can be a lot of call buying taking place, and the market can keep on pushing. The call buyers can get paid. And then when you're getting these pops towards one and higher, everybody's buying puts. There can be situations where everybody buys puts and everybody gets paid. But the market does feed off getting folks caught off sides. Rope everybody in long, rope everybody in short. Then we can get those quick aggressive turns. So to me, it's more of a context thing. Um, if the market is oversold, we're down to the key level, everybody piling in short, that might not be where I want to pile in short. I don't take that as an active buy signal, but I think good context. Then I can take that and say, all right, well, if everybody's getting, what are a few more things I can look for in terms of, hey, they're trying to set the bear trap? I don't think it can just be a big pop on the put call by itself. So I would look for a failed break underneath a key level, which I do think we had back on Monday, that 5,500 SPX. Big pop in the put call, a failed break below a key level of support, and then can we just finally get some buy signals? That's kind of the third and final thing we're not really getting. 15-minute on the SPX here for this week. We haven't had a 15-minute buy signal since the 25th of March. Okay, cool. So they flush it and they maybe rope in a few shorts. They got the big pop in the put call. They get the initial move higher going. But now what can I do with it? If I actually could get a 15-minute buy, hey, I can jump in and buy it. But I don't have that yet. Look at the 5-minute on the SPX. And all week long, we've had a 5-minute buy signal for a grand total of maybe about an hour. Push, 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 pull back, and then drop the ball. So I do think interesting today, if again on the gap down, and into all of the tariff talks later tonight, if we do get another big pop in the put call ratio, again, just context. Everybody and their mama buying them some puts. They might wake up to a big fat paycheck tomorrow. Could be a you sell the rumor, buy the news kind of event. A lot of the potential risk around all of that, I think, can be eliminated by just day trading. If I find a spot for a good short today, I can day trade and get short. If I find a great spot for a day trade long, I can day trade and get long. And then I can enjoy my dinner tonight. And if the futures are gapping up or gapping down 2, 3, 4, 5%, for one, I'll probably go sit down and try to trade some futures. But two, I'm not going to be caught in cash positions. And don't get me wrong, if Apple has a good day today and then everything goes good tonight, market responds well, Apple gaps into 230 tomorrow, am I going to be a little bit bummed out that I miss the Apple move? Yeah, of course. That's just human nature. But if I got a spreadsheet telling me, yeah, not a great swing trading market, and especially not swing long. If I've got this, this radar telling me, yeah, everything's got a sell signal. So here's the cash markets. Red is a sell. Green would be a buy signal, and nothing is just nothing. All right, I don't have any buy signals, and I'm not going to get more on a gap down. If I look at my Big 10 names here, all right, it's Apple with a 30-minute buy signal. The lone wolf on the buy side. That doesn't mean, okay, I'm going to buy a bunch of puts today and I'm taking them to bed. Day traded guys get through today, get through tomorrow. I think you'll keep your account intact. You'll keep your peace of mind intact. You'll sleep a lot better tonight. And then you're fresh to take advantage of whatever they want to offer. If tomorrow's a huge rally day, the last thing you want to do is wake up and you're trapped short. Then you're not thinking, okay, can I go buy some Apple? Can I go buy some Nvidia, Netflix? You're dealing with a bunch of losing trades. You buy a bunch of calls tonight, market gaps down, same situation. So day trade today, go to bed cash, and then shall not be a dull one for tomorrow. But all right, guys and gals, I'm going to cut you loose here. I'm going to go kick off the open over in my room. But as always, thank you for your time and effort. I appreciate you being here. Good luck today. Be patient, be disciplined, keep your account intact, and I'll talk to y'all later in the week. Adios.